I was recently on a podcast with Saifedean Ammous, the writer of the Bitcoin Standard, and we discussed Bitcoin and how the CFA Institute is going to adopt Bitcoin. If you're interested in just skipping through and going through the different topics that we discussed, you can check out the description down below. Enjoy the conversation.
Hello, welcome to the Bitcoin Standard podcast. Our guest today is Rajat Soni. Rajat is a CFA charter holder who read the Bitcoin Standard and got into Bitcoin, and he's been orange pill. And he's run into some interesting adventures with the CFA about Bitcoin and about his recommendation of Bitcoin to his clients and his recommendation of it on Twitter. So I followed with interest what Rajat was going through. And I think it raises very interesting questions about the CFA, about the entire financial advisory industry, and how it reacts to Bitcoin, and what Bitcoin is likely going to be doing to this industry. How is this industry going to evolve as Bitcoin continues to grow? So Rajat, thank you so much for joining.
Absolutely. Thank you so much for having me, Saif.
All right. So first of all, tell us a little bit about your background before Bitcoin. What were you doing with your life, and how did you end up with the CFA?
I was studying this fiat financial system just as hard as I could, just trying to learn as much as I could. I did the CFA exams. I have a background in accounting and finance. Honestly, I feel like time before Bitcoin went by so quick, and I don't completely understand it now that I've been just dedicating so much of my time to it after reading your books, after just reading the series that you put out. I mean, it's really changed how I think of the world. It's really given me a new perspective on where things are going. Before Bitcoin, I mean, it was more about just trying to make as much money as I could, save in this form of money that is basically forcing people to gamble, to buy stocks, to buy options, to buy all these things that are intentionally designed to give Wall Street our wealth. And I was really studying how that works. I was working with TD Bank. I was working as a bond trader. I was helping these massive corporations make 1 or 2% returns when inflation is 3 to 4%, and they were happily paying TD 0.5% in fees regularly. So worked in that industry, put in some time reading the Bitcoin Standard, started really understanding what Bitcoin is. And if I'm being completely honest with you, I didn't understand how money worked before I read your books. I didn't have that background because the CFA Institute, what the assumption is of the financial industry is that the US dollar will never go away. The assumption is that the US dollar will be used to store value, to exchange value, to as a unit of account forever. And there's no mention of the US dollar potentially leaving our lives. And I think that after I started studying this topic, after I started really looking into it, again, like I said, it changed everything. It changed my perspective of the world. And now, I mean, I'm working as hard as I can to educate as many people as I can about Bitcoin as possible.
Aren't we all? It's a very
Absolutely.
common experience. Once you bite the bug, you realize you just can't stop talking about it to people, and you just want to get everybody on board. I can definitely relate. Okay, so tell us more about what is the CFA? What does it mean to be a certified financial analyst?
So the CFA Institute is essentially it's the Chartered Financial Analyst
Chartered,
Institute.
yes.
Chartered, whatever, same thing. It's essentially just a way to evaluate assets in the legacy financial system, to figure out how real estate should be valued, to figure out how stocks should be valued based on certain assumptions that people make. I mean, the assumption is usually that inflation will always be 2%, and clearly that's not the case. The assumptions are also that the world will continue to value the US dollar. Again, not the case. But these assumptions that the old financial system, the old education system are built on, I think they're being challenged. And I don't think I think the CFA is building towards it. I think they're slowly getting education material out about Bitcoin, but up until now, there hasn't really been that much pressure to learn about Bitcoin, to spend time learning about Bitcoin, to
We're gonna get to Bitcoin, but first I want to get
right.
into the CFA. So, what is it?
Right.
Some of our listeners might probably be unfamiliar.
Yes.
So, tell us exactly, how does it work? How do you choose to become a CFA, and then what privileges do you get?
Of course. So there's 3 exams that you have to take. You have to finish those exams. Extremely difficult content. The content is boring. I mean, it probably has, I think it's like 3,000 pages per exam of material that you have to study, that you have to go through, you have to really understand. And you can do it by choice. You can have any background, any finance background, science background, whatever kind of background you want to have. You can take these exams, spend the time learning the content that they have, take that content, go to the exams, and just get it done. But essentially, what you're doing is you're trying to figure out where to put your money, where to help your clients put their money, where to make your investments so that you have the highest risk adjusted returns over the long term. That's the main goal here. I think that's the main goal of the financial industry in general. And the CFA Institute is just teaching you how to further the financial institution's goals.
Yeah. And so then with the CFA, what kind of jobs are open for you?
Analytics. You can do trading. You can work as a. So I worked as a fixed income analyst. I worked as I mostly worked in financial services, and then near the end of it, I worked in fixed income, just helping people rebalance their portfolios to figure out, um, I guess, how to make sure that they can make their expenses, how to pay for their expenses in the short term. There was a stock side of things as well. Stocks, of course, were 10, 15 years down the line. My side was bond analytics, bond portfolios, rebalancing portfolios, making sure that if somebody needs to, most of our clients were institutions. So let's say an insurance company needs to pay for a claim. They're going to give us a request to maybe clear some of their bonds out to find the right ones to sell, the ones that we expect are going to maybe be overvalued or are overvalued, and we sell those. We give them some cash. We give them access to that cash. So that was the goal. I mean, it's all about making your savings work for you, right? That's basically what the financial industry is built on.
Yeah, and I think the interesting aspect of this, once you learn about Bitcoin, is you start thinking, just why is this thing even necessary? Why should people need to make informed decisions about stocks in order to save the money that they've already earned? I think this is the point. This is the point that I made in the fiat standard, which I think got a lot of people to think deeply about this question. I think it's maybe one of the biggest critiques you could make of the fiat monetary system, which, as I call it, is you have to earn your money twice. You work for it, you earn it, but you're not done. Now you need to make sure that you're able to keep it for the future, and the way to keep it to the future is to go into the fiat casino and figure out whatever combination of bonds, stocks, commodities, all kinds of financial instruments that you could use in order to do this. And I think it's just a difficult task. And I think there is something kind of illogical about this as a job, in the sense of, how are you out there giving people financial advice on what to invest in when this isn't some kind of technical issue? It's not like you're giving a diagnosis as a doctor, where you study the symptoms, you study the patients, you study what a disease looks like, and then through your extensive experience, you're able to give people a diagnosis, which on their own they can't do. But it's a diagnosis that's based in scientific fact. It's based in on literature that should be built on decades of experimentation and records and scientific processing. And there is a falsifiability for it. To give somebody a diagnosis for a tumor, then they operate, they're going to find the tumor or not find the tumor. So there is a sense of, you're dealing with the real world. Whereas in financial markets, ultimately nobody knows what's going to happen in the future. It's completely, well, not completely, but I mean, it's fundamentally unknowable. Who knows what's going to happen? You're going to get something like COVID, you're going to get some kind of financial crisis. So nobody really knows what's going on. And how is it certified? How do you become certified in order to be able to give this as or chartered, I should say, that an organization is out there chartering you, saying that you are qualified to give advice and tell people where to put their money and which stocks to pick, when that could be a winning thing or it could be a losing thing, right? That there's no guarantee that your advice is correct.
Yeah, absolutely. Nobody knows what's going to happen in the future. I mean, the way that I think of it, my job was essentially useless. I was working. I know a lot of financial professionals are going to be very offended by this, but I've come to the realization that the job that I was doing was a waste of resources. I could have easily been spending my time doing something a lot better.
Do you think it's a waste of resources in general, or is it the fact that it is in the fiat system? But you could also argue that in the fiat system, given that the money is being debased, people do need to make those choices, and financial advisors and financial analysts can help them make more informed choices. So, aren't you being a little too harsh by saying it's useless?
I mean, the way that I think of it, I'm being realistic. I mean, if we had a sound money standard, we wouldn't need these kinds of jobs in the first place, right? The people who are paying me to give people advice are the ones who are making this problem happen in the first place. I worked at a bank. The bank is the one that's creating this money, giving people mortgages, as many mortgages as they want to, and at the same time, they're offering the other side of the solution where you can protect yourself from the debasement while they're the ones who are debasing the money in the first place.
Let's say Bitcoin didn't exist. Let's say we're living in a pre-Bitcoin world. Would you still think the same thing? Would you still think that it's useless to be a financial analyst, or do you think that's necessary at that point? Right?
I think before Bitcoin existed, I mean, like from your book, the gold would have been a great substitute. But the issue with gold is that you can't move it through the internet. We're moving to a different part of the world. Without Bitcoin, I mean, I think that the current financial system works the way that it does, and there's no real better solution, right? We can't trust just the random people to on our street to create their own form of money. We do have to rely on a central authority. With Bitcoin, it changes everything. Now we don't have to trust anybody. We don't have to rely on some random person that we don't know who doesn't care about us. The people at the top, I mean, the people who are creating this money, they don't care about us. They don't know us. They don't have any invested interest in our success. So to them, we're resources and we're essentially just pawns in that game that they're playing, right? I mean, that's just the way that I see it. But in the old system, there was no way to get around this. We had to rely on this. In the new system with Bitcoin, changes everything.
Yes. So you think in the fiat system, the financial analyst job makes sense, and you'd
Yes.
probably, if you weren't one, you'd probably hire one. You think?
Yeah, absolutely. I think it's necessary. If you're not spending 40 hours a week learning how the markets work, then you need somebody to do that for you.
You don't think there's a way out of that by just index investing for fiat people? We're assuming Bitcoin doesn't exist here. Just buy the index and get a mortgage, and then um, that. I mean, by getting a mortgage, you're effectively shorting the dollar, which is really realistically the smart thing to do in a fiat system. Of course, it's highly risky because if you miss a couple of payments, you lose your home and your deposit. So that's a huge disaster. But it is the smart thing to do in a sense of the more you're able to short the dollar, the more you protect yourself from inflation, in fact, benefit from inflation. And then there are index funds, which I think there's pretty compelling evidence that most index funds or the major index funds outperform most hedge funds. Hedge funds try and make a lot of money, and occasionally they get it right, but for the majority of the years, they're underperforming the S&P and the NASDAQ. So why would I hire a financial analyst instead of just getting a mortgage and putting all my money in S&P and NASDAQ?
The way that I think of it, indexes work great when times are good, right? I think you need to invest when you're just a uh, when you don't have the background in finance, when you don't really see the world going differently from how it's going right now, when you have those assumptions, you're also buying into the assumption that this is how things will continue in the future, right? The S&P 500 relies on the US government being able to print money. That at least that's how I think of it. That's how I see it. If the U.S. economy somehow something happens to the U.S. economy, I'm not saying it will, I'm not saying it can. There is that possibility, though. There's the possibility that more competitors come up and they essentially try to attack the U.S. financial system from within. And I think that's what could happen with maybe BRICS. I don't know how much of an impact that'll have, but I mean that's the assumption that you're making, right? When you buy just the S&P 500, you're relying on the US economy growing and continuing to grow essentially forever. But you never know if that's going to be the case, right? And if that's not the case 20, 30 years from now, how do you protect yourself? You can't go back in time.
Yeah, that's true. Although, I mean, I think in retrospect, I think over the last 20 years, particularly since, maybe arguably since 1994, the 1998 LTCM, I would say, since then, there has always been a constant chorus of people saying the financial equivalent of doomsday cults going around saying the end is near, everything is going to collapse tomorrow. It happened after long-term capital management. It happened after 9/11. It happened after the financial crisis in 2008. And it continued to happen after 2008 at much higher intensity. And then it happened after COVID. And yet here we are, 2024, and the S&P 500 is still making all-time highs almost every month or something like that. I don't really follow closely, but I think it hit an all-time high, like I think in June, right?
I think it hit a more recent all-time high too.
Oh,
It's been
okay.
just going straight up, so
Yeah, it's just number go up,
insane.
just at a much slower pace than Bitcoin, but it just keeps going up. I think people who sounded very smart, saying "Let's protect you against all of these uh, unpredictable disasters that are going to come around, against all of these black swans, there's these collapses, hyperinflation, and so on." I think looking back now in 2024, you have to remember that all of these things, yeah, they sound nice and they sound like they're common sense precaution, but they cost money. You can't buy insurance for free, and you can't insure against everything. You will run out of money before you insure against all kinds of possible scenarios, because there is an infinity of highly improbable scenarios, an infinity of things with a 1 in a million chance of happening, and you'll just run out of money trying to insure against everything. So I think, in retrospect, probably over the last 20 years or so, even throwing in the 2008 financial crisis and the COVID uh, insanity, if you just held and you shut off your news and you didn't listen to any of the financial talking heads and just bought S&P and NASDAQ, you've almost certainly outperformed all the massive uh, big money, the hedge funds, the talking heads, the think boys, the macro bros. You've arguably outperformed them, and you've done that without spending any time. So, like, you can spend your time instead focusing on your actual competitive edge, which, unlike stock picking, is something that you can control in a much more sane way. I mean, you can just get good at driving cars and then just start driving people around in Uber, and then you get a high rating, and then you start making good money in Uber. You can figure out how to do it at the times that pay you the most, and you can get good at it. Like all of these predictable jobs, you could become a doctor, you could become something where there's a predictability to the job, where you know if you put in some effort, you put in some work, you're going to get results. And if you're able to focus on something like this, you're going to do better than people who spend their time trying to second guess the central bank of Japan and trying to figure out whether Russia is going to invade Ukraine or no, or whether Iran is going to strike Israel or no, what the central bank of the US is going to do. I mean, it's just an infinity of noise all around you. And it's very, very difficult to try and make sense of how this is going to affect the assets that you're interested in. So, yeah, we can have this kind of doomsday idea, but I'm just, again, we're still talking in a world with no Bitcoin. Even in that world, doesn't it seem like trying to pick stocks and trying to analyze financial statements and trying to look at bonds is probably counterproductive for most people, as long as these indexes exist. And I think, on the one hand, you have that indexes are outperforming these things in the good times, but also there's no guarantee that your smart CFA approved newfangled strategy is going to outperform them in the bad times. I think the last couple of years were a great example of that. Everybody thought when the Fed was beginning to raise rates, all the big brains in fiat thought, well, now let's run into bonds, because now bonds are the safe haven, and let's dump our stocks and go into bonds. And stocks kept rising, and bonds took the biggest beating in the history of bonds, or the biggest beating in about 200 years. So, uh, does it really even matter, even in a fiat world? Does it even matter to start trying to be a financial analyst unless you really want to work in this business as a full timer? Does it make sense?
I think you're absolutely right. I mean, the way that I was looking at it, I was looking at it more from the hedge perspective, for from protecting yourself from really any angle. But I mean, you're 100% right. If people bought index funds, they do great. But I mean, again, I think one of the things that the financial industry provides something else. I mean, I guess you can study this on your own as well, but they kind of provide you with guidance on what to do with your money as well, how to be smarter with your money. I don't think most people really understand even the basics of personal finance, so they're not getting to the point where they can even get index funds. And those are the people that financial advisors aren't even helping, right? So I guess I would say that you're 100% right there. I mean, just buying index funds, spending less than you earn, I think you'd do great. Most people aren't even able to get to that point, though.
Yeah. So, as a CFA, do you give people personal finance management, or is it all about stock picking?
So now I've actually stopped. I don't personally buy stocks myself. I don't own any stocks. I don't own any real estate. At this point, it's just financial guidance. So if somebody wants to talk about Bitcoin, if somebody wants to learn about how Bitcoin works, we'll talk to them about that. Maybe they have a pending question that they just need answered and they don't understand something and they want to, instead of doing the deep dive, they just want me to give them the answer quickly. Something along those lines. I actually stay away from even talking about stocks at this point. I feel like with Bitcoin, with the world going to Bitcoin, I mean, it's different now. Before I understood Bitcoin, before I really was orange pilled, I was talking about index funds, I was talking about dividends, I was talking about rental income, and that was just the way the world was going. The wealth was concentrating with the people who were owning all of these assets, and it's moving from anyone who can't have these assets, who doesn't have access to these assets, maybe people in other countries, and it was going to all these wealthy people within the US, people who are able to buy these prime assets, these blue chip stocks.
Yeah. No, I think I agree. All right, so tell us then what ended up happening with the CFA Institute, and what did they do to you? Did they try and take away your certification because of your Bitcoin posts?
So I think somebody left a complaint saying that I was posting content about Bitcoin and how I'm giving guarantees on where this thing is going. And I think once you really understand how Bitcoin works, you know that there's no way to stop it, no way to prevent it from going where it's going. I think what bothers a lot of people is the fact that I'm constantly saying how real estate is going to trend to zero in terms of Bitcoin, and it's already happening. It's already a reality. A house costs 7 Bitcoin in the US today. Eventually, it'll cost 1 Bitcoin. And I'm a very strong advocate of this. I will constantly be saying this online. I will constantly be telling people this. But the question that people have is, what if you're wrong? But once you really see what Bitcoin is, once you see how it works, once you understand how it works, I mean, that's the point where the CFA Institute hasn't reached yet. But once you see how it works, I mean, there's no way to dispute the fact that this thing is going to keep going up forever.
Yeah, as Michael Saylor puts it, it's going up forever, Laura, as he famously said. Yeah, I think that's really the compelling point, and I think the CFA Institute would probably be right about any other asset. If somebody was out there promoting something like this, if you were a CFA and you were going on your Twitter every day telling people to buy Tesla stock or Apple stock or whatever it is, it would seem very odd because as a financial analyst, you obviously know that there's no such thing as just a good stock. It doesn't matter how much you like the product or how much you like the company. That it's not a popularity contest. Having a lot of sales doesn't translate to the stock going up. It might be the case that the stock is overvalued. So you look at the financial statement, you look at the income, and you look at the balance sheet, and you're able to ascertain whether the price is close to whether the current market price is undervalued or overvalued. So it would not make sense in this world to just have a constant opinion of any asset saying bullish Apple no matter what, bullish Facebook no matter what. Yet in Bitcoin, it kind of does. And I think the reason is that Bitcoin doesn't have returns. And many people point to that as a drawback in Bitcoin, as a something that makes Bitcoin worse. But I think it's actually something that makes Bitcoin better. The fact that it doesn't have a yield is why it can be monetized. Because if it did have a yield, like say Nvidia is currently a stock that's worth more than Bitcoin, or Apple, I think, is worth more than Bitcoin, Amazon. These stocks are worth more than Bitcoin, but they are not as good a form of money as Bitcoin. They can't work as money as Bitcoin, because if everybody starts using Nvidia stock as Bitcoin, well, also, I mean, if everybody starts using Nvidia stock as money, there will come a point at which the price of the stock is going to go up far beyond the returns on the stock. And because it's just a company and it's private, they can always dilute the shares of the people that are using it as money. So it works terribly as money because you can be diluted, and because actually this is not an instrument to speculate. Primarily, it's an interest. It's an instrument to get a fraction of the profits that this instrument, that this company yields. So that's a share, it's equity. It's functionally very different from money. With gold or with Bitcoin, it's not something that offers a yield because it's a form of money. It appreciates because its price appreciates because people demand it, because they want to hold it, because it makes for a great cash balance asset. It sits great in your cash balance because nobody can make more of it, so it can't be devalued. So it doesn't have the dilution risk that equity has, and it doesn't have the equity risk of shareholders getting wiped out because of lawsuits or bankruptcy or so on. So it's a lot less risky in principle than equities. But that's why, once you think of it this way, once you see it, then yeah, I agree with you. It looks like it's going up forever, and buying it, at least with a 5-year time horizon, seems like a good choice anytime, anywhere.
Yeah.
It's something that you could. I mean, I have no problems recommending it to anybody, and if I'm asked, I always say 5-year hold Bitcoin for 5 years and you'll be all right. I think in all the history of Bitcoin, there were only a few days in December 2022 in which people who bought 5 years ago were down. That was at the bottom of the 2022 market, which came exactly 5 years after the top of the previous bull market. And so that combination led to a few days in which you were down if you bought 5 years ago. But then in a few days that changed because Bitcoin went up and the 5-year level crashed. And so there's almost always been a good return on a 5-year. And I think it's, if not 5 years, then wait a few more weeks and you'll be all right. So it's generally worked out so far. And of course, as CFAs will say, past performance does not guarantee future results, but they can be quite indicative. And unless something substantive and major changes in the fundamentals of Bitcoin, then I don't see why they would be different. I think the point that I make in the Bitcoin Standard is that this appreciation happened not by coincidence. It happened because the supply is irresponsive to increased demand. And unless somebody finds a way of making my node start churning out more Bitcoin, then I don't see that changing, because you can't just change it in your node. You have to change it in everybody else on the network. So good luck with that. Good luck convincing me to download the inflationary software on my node. But unless you can do that, then we're not going to get an increase in the supply of Bitcoin to meet any increased demand. And the fact that that remains is going to mean a lot more people are going to continue to get attracted to it.
Yeah, absolutely. I think one point that you made there with stocks versus Bitcoin, the way that I see it, Apple from 30 years ago is not the same company as Apple is today. They're not the same company. They're not producing the same products. They don't have the same executive team. They don't have the same plan. They don't have the same ideas. They're changing constantly. On the other hand, you have one Bitcoin from 2010. That Bitcoin is worth the same amount as one Bitcoin from today. Any Bitcoin that's produced today, it's the same thing. It's exactly the same thing. It's never going to change. The 21 million fact remains that the 21 million will stay the same. Same thing with gold. If you had gold from 5,000 years ago, 1 ounce of gold from 5,000 years ago is the same thing as 1 ounce of gold from today. If they have the same purity, same element, you can't change that. You can't destroy that. You can't disrupt that. With stocks, the thing is that, I mean, again, it's all based subjectively on who's running the stock, the executive team, what they think the future will hold, how they think the future will change. I mean, the executive team could make one wrong decision and completely destroy the future of the company. For example, we have companies like Starbucks. Starbucks made some decisions in the past, and now they're suffering. Their shareholders are suffering. Of course, it could be part of. I think we've been in a recession for a long time now, but it could be part of that. But it could also be what they did over the last couple of years. I don't want to go too deep into that, but I mean, of course, any company can make those decisions that really hurt their company in the long term, and the shareholders have no idea that it's even happening because they don't know every single detail. You don't know every single detail that's happening in the back end. I mean, you could. I know it's not very likely, but even auditing firms can collude with companies, give them certain results that they want. They can audit their financial statements, and they can help them out, exactly like what happened with Arthur Andersen and Lehman Brothers. Arthur Andersen and Enron, I think it was. But
Enron, yeah.
whatever those correlations were, I mean, you can have the same thing happening today, right? You don't know what's happening with Apple on the deep back end. You don't know what the executives know that maybe the shareholders have no idea of. And again, completely different with Bitcoin, completely different with gold. We know that if you hold an ounce of gold, that ounce of gold is yours. It's a bearer instrument. With an ounce of with when one Bitcoin in cold storage, you know you hold that one Bitcoin forever. And because it stays the same and it continues to stay the same, I don't agree with past results and future results. I don't agree with that statement because a stock changes over time. Bitcoin and these bearer instruments like gold, they don't change. They stay the same. So I think past results should indicate future performance with Bitcoin because the adoption is just going to increase.
Yeah, well, I guess that's the part where I can't guarantee it because you can't really guarantee that the adoption will increase. So I can, with a very high degree of confidence, predict that Bitcoin's supply is not going to change, but I can't really predict what human beings will do. I mean, who knows? People buy JPEG receipts, so all bets are off. But the point that I bring up, I think, is that even if Bitcoin's demand doesn't increase, if Bitcoin's marginal demand every day stays constant, then Bitcoin's price will likely double every 4 years because the supply halves, the new supply that is being produced every day drops by half every 4 years. Now, on the other hand, if the demand stays constant, then every 4 years, the demand would be double the price. And then the only way to adjust to meet that new demand would be for the price to rise. So even if, say, 90% of humanity were to swear off Bitcoin, they will just never, ever, ever touch Bitcoin. The 10% of humanity, or even the 1% of humanity, can continue to watch their Bitcoin appreciate because they're going to be, they're taking a dollar, they're taking, say, 10 cents out of every dollar that they earn and they're putting it in Bitcoin. And if that amount of money stays constant, if that 1% of humanity keeps saving its money in Bitcoin and the 99% of humanity never touch Bitcoin, that 1% is still going to get richer because they're storing their wealth in a form of money that isn't getting debased. So every dollar they save in Bitcoin is going to get debased less and less and less over time. So every 4 years, the amount of debasement that it is subjected to daily is going to drop by half. And at the same time, all the other alternatives forms of money are going to continue to decline. So I'd agree with you that there is a lot of reason to say that maybe past performance does guarantee future results, but I'd be hesitant to say it. But I mean, hey, you're the CFA, so what do I know?
Probably not at the same magnitude, but I mean, I think over time, the purchasing power in anything stored in Bitcoin is going to go up, right? Maybe it won't go up 10 times a year, but
Yeah.
maybe it'll go up 5-10% a year, because over time, even the people who own it, they still want more. It's not like they want less. I don't know a single person who wants less Bitcoin. If they understand how Bitcoin works, I don't know a single person who actually wants less. If they have to spend it, if they have to sell some, of course, to pay for their expenses, it's not like they're doing it intentionally. They're not trying to get rid of their Bitcoin. On the other hand, with something like a rental property, you kind of have to get rid of it at some point because there's management involved. With Bitcoin, you just hold on to it.
Yeah, this is another massively underrated benefit. A lot of people talk about having success with real estate, but a lot of that comes with a lot of active management. Say you're renting out apartments or you're renting out an Airbnb. It works out as an investment, but you got to remember that that's a job. You're taking out time from your job. You could be out there learning to become a better doctor in that time, focusing on your advantage, which is you're a doctor, you're trained as a doctor, so you could work as a doctor. But yeah, if you sacrifice time from being a doctor and you spend it on working on accumulating financial assets which can beat inflation, then yeah, you can make a return. But the question is, was it worth your time? If you'd put that money into your job, you would have probably made more. I think this is the interesting thing about it.
Yeah, agreed completely. I
Yeah.
think if a doctor were to just improve their skills, or if let's say a financial advisor were to improve their skills, learn more about how the markets work, they'd do much better than continuing to buy real estate and wasting their time learning as much as they can about real estate, and instead just buying Bitcoin, just saving it on the side, keeping it on the side. I'm not sure if you know about this company, Tahinis.
Yeah, of
Do you know
course.
about
Yeah,
them?
yeah.
They're doing great. I mean, they have this business and they're setting Bitcoin aside and they're just focusing on making better products. I actually live close to one and I see that they have all these new ideas, all these random new ideas every single time I go there. It's so cool just seeing them being able to innovate and be creative because of what Bitcoin does, instead of having to waste their time managing rental properties, managing their stock portfolio. They can focus on their craft.
Yeah, I think this is a great example. I know the guys, Tahinis, if you're in Canada, go out and find yourself at Tahinis. I think they've got something like 30, 40 branches now across the country. They're an Egyptian shawarma place. So I obviously recommend the shawarma, but I also recommend their financial strategy, which is that 4 years ago, and it was exactly 4 years ago, they just tweeted about it a few days ago. 4 years ago, they started putting their cash in Bitcoin. And that's worked out very well because 4 years ago, Bitcoin was, I'm guessing, around $7,000, $8,000 or something like that.
Something like that, yeah.
So, sorry,
Something like that, yeah.
yeah. So over the past 4 years, the money that they've put in Bitcoin has appreciated significantly. If they'd kept it in dollar, it would have depreciated. And I think it's really interesting what you say about them being able to be creative and to expand their business because of Bitcoin. I think that's very true, and it's similar to what we were saying about an individual, whether you're a doctor or a dentist or an Uber driver. You're better off focusing on your craft generally and trying to earn more money rather than continuing to focus on something which you can't really develop competence in very easily, and in some way something in which even people who develop a lot of competence can't really do, which is beating the markets. And part of running a business is all about knowing how to manage your credit and manage your debt and manage your financial obligations. I mean, a lot of running a business in a fiat world is really moving around the hot potato of fiat money and knowing how to borrow it and when to spend it and how to um, organize your cash flow in order to be able to manage the debt payments, which is necessary in a fiat world, because if you're not doing it, then your competitor is doing it. And if he's doing it, then he's able to have good financial management so he can undercut you on the price and he can get lower credit, lower interest rates on credit. So a lot of business is all about the financial management rather than figuring out how to make your shawarma better. But when you buy Bitcoin, then you take the cheat code essentially. It's like a cheat code to financial management because you don't have to get into massive amounts of debt in order to protect yourself from inflation and operate on to try and get as big as possible so you can get into as much debt as possible. So you're pretty fragile so that if you have a couple of slow months, then you've got a major crisis and you can't make your paychecks and things could unravel. Well, now you've got a balance sheet that has an asset that continues to appreciate over time, and it keeps getting better and better to use. And now your financial position keeps getting more secure with time. And so then you are less stressed about making the next payments because you've got a big reserve that you could use to make the payments. And you're more able to focus on what matters, making your shawarma better.
And I mean, if they really have to, if they end up maybe in a financial position where they're not making money, if we do go to a recession, their Bitcoin is very likely going to appreciate, and they can keep funding their employees' salaries, and they can help their employees live a good life at the same time, just because of how things go with Bitcoin, just because of how Bitcoin supports the small business, how it supports people who want to create value and add value to society.
Yeah, absolutely. And I think this is something people massively underestimate, the importance of savings. People are very well conditioned to just say, well, you don't need savings because you just invest and you can borrow. And the fact that we don't have with the fact that our money declines in value means that everybody can get mortgages when they want to. So why do you need savings? Just get a mortgage like normal people and be a debt slave. Well, no, debt slavery is expensive on the soul. It's destructive, it's stressful. And I think a very important part of it is that it's limiting to your liberty. You can't live your life as you want because you're tied in with a 25-year mortgage. You're tied in with a massive loan for your business, and you just can't opt out of any of those things. You need to keep continuing to work on them to constantly make the payments, and your sense of security is undermined. And I don't see why this is marketed as such an obviously good trade that look, we just give up a little bit of financial security and then we can get more GDP, which means we can get more cheap plastic crap toys that we don't need. But that's ultimately what it is. It's this fixation on we need to have more spending, we need to have more GDP, we need to have number go up, we need to have all of these things increase, increase, increase. And if we can juice that by devaluing the money so that we can make it so that people don't save, so that people spend more, then people will have more things and then we'll be richer. But you're not making people richer by making them spend their money away from where they want to spend their money. People would have rather saved that money. That means the safety that having a cash balance gives you was the thing that they wanted to purchase. You took away their first choice, which is saving, and then you told them, well, so you don't need savings anyway. Now go buy cheap plastic crap, buy a new TV or buy a new laptop or a new phone or whatever. But why should it be that a new TV is more important than financial security? You can make do with an old TV and financial security, I think, better than you can with financial insecurity and a new TV. And that's the bargain essentially of fiat money that, hey, just give up your financial security and your peace of mind, and you'll have uh, more plastic toys you don't need.
I think one of the problems here is that people are just addicted to cash flow. They want as much cash flow as they can get. They don't care about capital gains. Like let's say, if I post about Bitcoin, somebody's going to say that oh, Bitcoin is worthless because it doesn't provide cash flow. But the returns that you're getting from Bitcoin are making up for the cash flow. When you're buying, let's say, a stock, so you're getting a dividend from Nvidia. Nvidia is forced liquidating their capital to give you your dividend so you can spend money and you can have more of an incentive to buy their shares, and they have more capital coming in. On a Bitcoin standard, you don't have to worry about that. You just save. You don't have to worry about cash flow. You can make your own cash flow essentially. I think that most people can't wrap their head around that. They want to be able to hold on to their assets. They want. I think one of the things that the legacy financial system does is it just completely eliminates opportunity cost. You don't have to you don't have to save. You don't have to delay gratification because you can have instant gratification while you're delaying gratification. It screws things up, and it makes the people who don't understand the financial system, the people who just hold this cash, these US dollars, they're the ones who suffer in this system. It's just designed to ensure that I guess the wealthy can consume while saving for the future. They don't want to sell their houses, they don't want to sell their stocks, so they can just borrow against them. That's just how the system is built. I mean, and we've come so far to have this so deeply ingrained in society, and most people don't want to sell their assets because that's just how they've been raised. On a Bitcoin standard, it stops that from happening. I think that's the one of the things that is going to change so many parts of the world. I know from your book you were saying how it's going to change art. One of the reasons for that is that we can actually dedicate wealth to anybody. We can dedicate wealth to, let's say, a specific part of the world, and we can give the people there who have these skills. They can actually start making new creations. They can start making art. They can start making digital products, and they can sell those digital products for this wealth that we have. But in the old system, again, the value is being taken from the people who create value, and it's being given to people who just hoard all these assets, stocks, real estate, and they're just able to do whatever they want to. They're able to consume while being able to participate in the future growth of their assets, which to me doesn't really make any sense because you're having your cake and you're eating it too, right? And that's not the way that things should work.
Yeah, I agree. I don't believe in the idea that you could have a that you could just take risk out in this regard. And of course, I mean, yes, there is this system is massively beneficial to people who are rich because you can just monetize your assets without having to sell the assets. If you have a lot of money, you can borrow at a low interest rate. You can use your big assets as collateral. And as long as you're able to keep enough cash flow coming in so that you pay the debt, then you're effectively living off the asset without having to sell the asset. So you're eating the cake while the cake stays there, effectively. And that is true. And that is massively harmful for social mobility because otherwise this person would have to sell the house to somebody who would be able to afford it, and then that person say would move to a smaller house because they want to consume more. So you move to a smaller house, you sell the bigger house, and the person who wants to buy the bigger house can now afford it because they've worked their way up. But when you have that system, it's just the haves keep their stuff and the have-nots keep watching the stuff that they want get more and more expensive, and they see their paycheck and their savings not keeping up. But there's the flip side to this is that, yeah, the rich get to keep their stuff, but they also risk losing their stuff completely. There's always that risk. So they're protected in a sense, but you're a couple of paychecks away from losing everything, and then that's a real problem. So it does have the wrong kind of social mobility if you want, and that you could be very rich, but you miss a couple of paychecks and you lose your house, you lose your business, you lose your job, you lose everything, and you're back on the street. But that's also not very good for mobility because the poor people also suffer from that as they start accumulating assets, as they start buying things and getting into debt. They also get into the same kind of problems as well. So it helps. It stops them from appreciating their wealth significantly, and that's why I really think there's nothing you could do to help with inequality or with any of these problems that you have, other than just people having sound money. If people just had hard money, everything would be so much better.
Yeah, if people didn't have to study for 4 or 5 years to really understand how the financial system works, I mean, they wouldn't be making the mistakes that they're making today, right? It all goes from really theory to just being common sense. Right now, the theory tells you, oh, you should invest, you should buy stocks, you should buy real estate, you should do all this stuff. But I mean, it just goes to being common sense. You just spend less than you earn, save the difference in Bitcoin. That I think that's the part of it that the financial industry doesn't like. The CFA Institute probably doesn't like because we go from needing this CFA designation to provide financial advice to not needing it at all. And now anybody can really help anybody else be educated on finance, and everybody in the world can benefit from this asset.
Yeah, this is, I think, the uncomfortable thing for the CFA. I don't think they quite get it yet, but they don't imagine that we could be in a world in which people's money outperforms their financial advisor. But I think that's logical. That should be the case. Money appreciates to the extent of the increase in productivity all across society. But that's, I mean, obviously, there's it's distributed, so there's a lot of increase. So it's going to have to be difficult for you to beat it with an individual investment. That should be the case. And that's fine. It shouldn't be, we can't have a world in which the majority of people outperform the market, because the market, by definition, the market is, half of people are going to underperform and half are overperforming. So that's always going to be the case. What hard money allows us to have is that the base case is you appreciate your wealth. Whereas with fiat, the base case is your wealth is lost. So you need to outperform the market in order to keep your wealth. Whereas in a world with a hard money, you get to keep your wealth by default. Your wealth appreciates slightly by default, and then you have to do something really, really exceptionally special in order to be able to outperform that. So does that, in your mind, suggest that the way this goes, the way this industry goes, the way the financial advisory industry goes, is more and more toward personal finance and away from trying to tell people how to manage their portfolios because you just buy Bitcoin?
Yeah, absolutely. I think on a smaller scale, you can outperform Bitcoin. Let's say, so I started a YouTube channel recently, and I invested $500-600 into it, which instead of I could have bought Bitcoin. But on my scale, the scale that I'm at, the investment that I made has tripled, quadrupled in value. On a small scale, I can do that. But let's say you have a massive company, one of the S&P 500 companies, they can't triple their investment. They're not going to triple in a year because, I mean, of course, they have all of this bureaucracy. You have to rely on an executive team agreeing with you, making your ideas. You have to just go through so many hoops to make your ideas work. But on an individual scale, like let's say for me, let's say for you, you can go and write a book, and you can spend your time, you can spend your Bitcoin on writing this book, and you can probably triple, quadruple, 10x the value of your Bitcoin. You can get back 10x the value, but on a bigger scale, you can't do this. I think yes, I completely agree with you. The financial industry is going to move more towards personal finance rather than advising on assets. I think on a Bitcoin standard, it doesn't really make any sense to buy all these massive companies. You're getting a 10% return when just holding Bitcoin gives you a 50, 60% return. These assets are very likely going to have to be repriced. I think Jeff Booth was on your podcast. He was saying this. Maybe he was on another podcast, but he was saying how everything is going to be repriced. It's just how the world is going to transition eventually. If we do go to a Bitcoin standard, I think that's just how it's going to have to happen. The S&P 500 is going to have to be completely repriced. Houses are going to be under one Bitcoin. I mean, I was looking at the numbers. There's something like 2.4 billion houses in the US, or sorry, in the world, all over the world, 2.4 billion houses. And it's hard to find a house that's worth under one Bitcoin. Eventually, these prices are going to have to come down. There's too much monetary value being associated with these assets in the legacy financial system. And the legacy financial system, of course, is built to keep adding to it, keep getting more and more people to contribute their wealth to it.
Yeah, absolutely. Very much so. All right. I've seen some of your tweets on microstrategy. You say that you think microstrategy might become the world's most valuable company and Michael Saylor the world's richest man. Walk us through your reasoning, Mr. CFA.
So the base case here is that MicroStrategy is trying to accumulate more Bitcoin per share, and they're trying to outperform Bitcoin, which is the key here. There are some trackers. If you go just on Google, is a MicroStrategy tracker where you can see that over time they've gone from 0 Bitcoin per share to 0.0011 Bitcoin per share, something along those lines. But whatever the numbers are, they've increased it significantly. And over time, the way that they're doing it, they're borrowing money at they're borrowing a form of currency that can be created at will. They have these shares that they can use as capital. These shares have future value associated with them already. They're being sold at a premium of something like 1.8 times the current net asset value of MicroStrategy. And MicroStrategy is using this as collateral to buy more Bitcoin, to sell more shares at the market price, buy more Bitcoin, to get I think they're convertible loans. I don't know what the debt instrument is called, but they're essentially taking on more and more debt. They're using this fake money to buy more Bitcoin, and over time, MicroStrategy's goal is to just keep increasing the number of satoshis per share, which to me is genius. And there are going to be more companies that try to do this, more companies that are going to try to uh, copy their strategy, try to get to that 1% of the entire supply, but I don't think they will. But the main thing here is that anybody else who tries to do this is going to pump up MicroStrategy shares. And that's pretty much it, right? I mean, there's nothing really, nothing more to it. There's no cash flow analysis here. I don't care about cash flow. All I'm worried about is Satoshis per share.
Yeah, that's a very powerful way of putting it. And I mean, people try and talk trash about Michael Saylor, saying, "Oh well, that's not his core business, and that's not fair. You know, he should be out there making enterprise software and selling it to people instead of trying to get rich by leveraging Bitcoin." And again, I think this is an incredible example of sour grapes, because he runs enterprise software. Bitcoin is enterprise software. So he comes across this open neutral protocol that's out there, and none of the world's major companies has figured out what this thing is. And he figures it out, and he figures out this is going to be the enterprise software of the 21st century. All the world's enterprises are going to need this. And he stakes an early claim into it. And it's just a very genius move to do that, because I mean, he's got MicroStrategy's got more than 220, I think 230,000 Bitcoins at this point. So they've got more than 1% of all the Bitcoin that'll ever exist. They've already uh, bought it. So this is clearly a very, very smart strategy. And I think it's entirely conceivable that he might end up being the richest man in the world, because he's using Bitcoin to buy more Bitcoin. He did get lucky with his timing to an extent, but luck favors the brave. Arguably, I mean, I remember when he first came on, or about 6 months into his Bitcoin career, I had him on my podcast for the second time. So I had him once first time, and then I had him second time, and I was discussing with him the possibility that we're going to see another 70-80% drawdown, and he completely dismissed it. And he said, no, that it's over. We're not going to see those things. Apple's coming in, all Tesla's coming in, all the big companies are coming in. It's game over. Now, we did end up seeing a 70 and 80% drawdown, but he survived it. But I think he may have not survived it if he had started buying say 6 months later, if he instead of, or maybe a year later. So he started buying it around 10,000. It was also exactly 4 years ago, August 2020. So if it had been, and at that point Bitcoin was like $9,000 or $10,000, and he and MicroStrategy started buying at that point. Now, if they'd discovered this 6 months later, I don't think his theory would have fundamentally been different. But 6 months later, Bitcoin was around $30,000. Or 8 months later, Bitcoin was around $40,000, something like that. So if he'd started coming in aggressively from 40 to 69,000 during the bull market, and then the price crashed down to 15, that might have been risky. But he's crossed that chasm now. And I don't think he's going to put himself in a position where he's going to be wiped out with a 70-80% drawdown. I think he saw it last time. He told me, and the next time I had him on, he told me, all right, you were right. But I don't think he's going to take his chances again. And at this point, he doesn't need to. He could still run this strategy relatively conservatively without taking on a lot of leverage, and be completely immune to liquidation even after an 80-90% drawdown, and still manage to keep outperforming Bitcoin. So I think you've got a strong case there. I think Bitcoin continues to appreciate. Michael Saylor might rule the world.
The good thing about his strategy is that he's intentionally getting these loans that can't be called. So he's getting 4 or 5 year terms where he knows for a fact that he's not going to get margin called. So if something does happen, he can probably roll that loan over if he wants to. He can pay for the servicing with his company, the cash flows that he's making. And I don't think that would be a problem. If anything, worst case, maybe he can put more Bitcoin up for collateral at some point if he needs to. over time, the thing is that he's paying off his loans. It's not like he's not paying off the loans; he's still paying them off. And then the Bitcoin that is not being used as collateral, he can just add it to his collateral, right? He can just make it. He can essentially recollateralize his loans with Bitcoin that hasn't been used yet.
Yeah, I think it's a very, very, very smart move. And I think 5 years from now, 10 years from now, a lot of people are going to be asking themselves, how could I miss that? Why did I miss it? Why didn't I listen? And we'll be there to remind them that a lot of people tried to tell you, and you were being a smartass about it. You were sitting there telling us, oh no, they're going to hack Bitcoin and they're going to shut down Bitcoin and they're not going to let it work and so on. But you know what? Opportunities wouldn't exist if people weren't thick.
If everybody knew, I mean, this opportunity absolutely would not exist. You're right. If 99% of the world was already into Bitcoin and they already understood Bitcoin, we would already be on a Bitcoin standard.
Yeah, there'd not be the massive appreciation and opportunity
Yeah.
ahead of us. Yeah.
Yeah.
All right. So now I'm going to try and get some useful, actionable information out of you for my listeners. What are the most important things that you should know as somebody who's trying to save for the future? What are the things? What are the important aspects of financial planning that people should keep in mind? Because I think in Bitcoin, I think there's this sense of, wow, I don't need to deal with any of this fiat bullshit because I could just buy my Bitcoin and then focus on my job. And I think that's true. So I think it's great that Bitcoin liberates you from having to follow what the Fed is doing, from having to worry about bond markets, global central banks, all of these things. But you still need to be able to plan financially for yourself. So, what are the basics of financial planning that you would think are the most relevant for a Bitcoiner?
I think the first thing is making sure you spend less than you earn. That's the key. I mean, if you can consistently do that, you're going to be able to build your Bitcoin savings. That's the first thing. The second thing would be to make sure that you're not taking on stupid loans to buy things that you don't need. If you're taking on credit card debt to go on vacation, I mean, you're kind of screwed. If you're taking on tens of thousands of dollars of credit card debt to go to vacations with your friends and family just to take a picture, or with just go alone, post that picture on Instagram, take a video, post it. I mean, you're in a bad position already. So avoid those loans for consumption items. I think investing for assets like hard assets like Bitcoin, I think that's a smart decision. I think that could work pretty well. I personally wouldn't recommend it for the average person to take on debt to buy Bitcoin, just because the the volatility there can kind of hurt you. But in general, avoid debt. Uh, Avoid those 20% interest rate credit cards, 30% interest rate credit cards, because you're never going to be able to pay them back. If you just keep paying the minimum payment, you're just going to get worse and worse, and you're going to keep digging yourself into that hole further and further. After you've dealt with all that, I still think that there's a value for insurance, being able to transfer some of your risk to someone else. Let's say, I'm not saying get whole life insurance, I'm not saying get a specific type of insurance. I don't sell insurance, I have nothing to do with that. But I think having term insurance could be smart, because if you, let's say you're in your prime earning years and you pass away and you don't have enough of a Bitcoin stack, if you don't have enough savings, your family is going to suffer without you. If you're the main breadwinner and you're the one who's earning all this income, you need to make sure that your family is safe. If your family is not safe, if you were to pass away, if your income were to disappear overnight, then you're not doing your job, right? I think that's the thing for the main breadwinner of the family. Having term insurance, having a certain amount of insurance to protect your family in case something does happen to you, that's key. After that, I think you can start going into saving for the short term. Have an emergency fund, have a sinking fund for any expenses that you think are coming up. Let's say you have to pay for tires, and your tires are going to cost you $1,000, and you need them in a year. You can start saving $100 a year. Put those $100 a year into the sinking fund. Just build your savings, build your ability to pay for this thing that you know is coming up, this expense that you know is coming up, and make sure that you don't have to sell your Bitcoin when this happens, just unexpectedly, because you never know. Let's say a year from now, Bitcoin's price drops 80%. You don't want to have to sell your Bitcoin at that point to buy a consumption good, which I think would not be a very smart decision. The next thing you want to do is regardless of what happens with fiat currencies, I think it's smart to have a small stash of fiat, maybe 3 to 6 months, whatever you're comfortable with. Just have that set aside because if, let's say, the world does go crazy, let's say something happens, let's say the internet stops working, let's say something happens here where you're in a position where you can't pay for your lifestyle. Maybe you want to have some physical cash, maybe you want to have a little bit of gold just on the side in case. I think all those things, when you combine all those things, you're in a pretty good position to start buying as much Bitcoin as you can. Once you have those things set aside, keep investing in yourself, keep building your own skills, keep being able to provide value to society, to the economy, to the market, and I think you're going to be in a pretty good position to start buying Bitcoin. Once you have all those things set aside, I think you're pretty safe. There may be things that I missed there, maybe some nuanced things that apply to one person, an individual. I don't think that 401ks are the smartest decision at this point. I don't think buying things like rental properties at this point is very smart. The price of rental properties is going to trend down, and your goal, if you're buying rental properties, is to save for the future, to build value for the future. If your rental property is worth 7 Bitcoin today, and in 10 years it's worth 0.7 Bitcoin, you've lost 90% of your purchasing power in real terms. In terms of maybe fiat currencies, maybe your rental property will double in value or triple in value in that time, but what's that money really worth if you can't spend, if you can't get the best asset in the world, then you've lost a significant amount of your money. A lot of people who are buying stocks, buying real estate, they're buying as much as they can, and they're missing out on this complete change in how the world is working because they're so stuck in this old financial system. So I think once you have those things set aside, once you have the short term issues resolved, you can start looking into Bitcoin. Start building a Bitcoin stack. Start building small amounts over time. You don't have to buy thousands of dollars of worth. I think that's one thing that a lot of people are confused about. They think that you need to buy $60,000, $70,000 worth at the same time. You can't buy fractions. But that's the thing. You can buy $1, $10 worth, $5 worth, whatever you want to. There are I have some friends who live in Nigeria, just people that I met through social media. They're buying a few cents worth a day if they can, because 1 naira is equal to 1 satoshi at this point. So they're buying whatever they can, and they're stacking as much as they can. And I feel like the people in those countries, they understand the value of Bitcoin because the naira is always losing value. People in the US are not seeing it. But once you see it, again, it shows you how personal finance and Bitcoin just really work together. They're the perfect match. They're just made so well. They're when Bitcoin solves all of the problems that we had in the old financial system, the economic problems, and it solves all the the personal finance problems that we've been experiencing. You're probably not going to have to borrow money to buy a house on a Bitcoin standard. You're going to be saving for maybe 3 to 5 years, and eventually you'll be able to buy that house because your savings, your delayed gratification will be compensated properly.
Yeah, I agree. And I think there's something really nice and liberating about buying things in cash. If you've actually just saved up for the thing that you want to buy and then you manage to go and buy it, I think it feels a lot better than buying it with debt. Making a massive purchase that's going to tie you down to a financial liability for 20, 25, 30 years. I mean, you're happy you have the house, but you've just loaded your back with a very massive burden, and the fear of anything going wrong is going to be very stressful. So people are scared of this idea, but I think with Bitcoin, look, you can save and it appreciates, and then you'll be in a probably if you're willing to give up buying things for a few years in order to hold on to Bitcoin instead and save and accumulate Bitcoin, then you'll be able to buy things with cash, which I think is a lot better in many ways.
And you're actually giving somebody value. You're not giving them this fake piece of paper that's worth nothing. You're giving them actual value. You're creating, you're compensating someone for creating value with real value. You're giving them something, an asset that they can just hold on to. They don't have to think about investing it or putting it into their bank account. They can just put it in their wallet and they're good to go.
Absolutely. All right. Well, Rajat, do you have any other important insights and ideas you'd like to share with us?
I think I think reading the books that you wrote, I think they just changed my entire perspective of where the world is going. I think that's the thing that I want a lot of people to really come to the conclusion of. I want them to see where this is going, and I think your books did a great job of it. I think they did an excellent job because they summarized everything that's going on, the history of money, the way that money has worked in the past, the way that money will work in the future. I think that's the main thing here. I just want to get the word out. I want more people to understand this, to learn about this, to be able to improve their lives. That's what I've been doing. I've been trying to do that with my YouTube, my Twitter, my Instagram previously, but I mean, the goal here is to help as many people as possible.
Yes, thank you so much, sir. Really appreciate it. So, where can people find you on the internet?
I'm on YouTube, Rajat Sony Finance. If you just search Rajat Sony Finance, you'll find me. I'm on Twitter as well, Rajat Sony Finance, but in the finance, there's no I. So Rajat Sony, FNANCE. Other than that, I'm not too active on Instagram anymore. I was posting a lot on Instagram. I have a newsletter, not too active on there. Yeah, I think the YouTube is probably the greatest way to find me. That's where I'm putting out the most content at this point.
Nice. Okay, excellent. Well, thank you so much for joining us, and thanks for sharing your experience. And I hope you continue to tell people more and more about Bitcoin. The world needs more Bitcoin evangelists. So thank you for all you do.
Absolutely. I think your book did a great job, and I've been pushing it as much as I can. I've been trying to help as many people just read this. I love that you put out an audiobook version and you allowed it to be there because I mean that's one of the reasons why I even bought the physical copy in the first place. So yeah,
Wonderful to hear, sir. Thank you so much.
absolutely. Thank you so much
All
for
right.
having me.
You too. Take care. Have a good day.
You too.
Bye.